While we're talking about jewels, the festive cheer in the markets, it's quite evident that it is playing out in the markets right now as well, because the Nifty has touched a new high, 10,170. We are 0.8% up right now. This climb has been generated by the likes of Bharti Airtel, Bharti Infra, which are leading from the front as far as gainers on the Nifty are concerned, with a 7% up move on a Bharti Airtel as we speak. The Nifty has touched 10,170. We're scaling new highs over there. The correction took place not too long ago. It did not run too deep like many were expecting, but the correction did come in. But after that short dip that we've seen, the markets have been taken over by the bulls yet again. And there you have it. The Nifty is at an all-time high yet again. The euphoria that was generating when the Nifty touched 10,000 has happened yet again now, with fresh highs getting achieved. 10,170. Mayuresh Joshi is joining us on the phone line. Mayuresh, more reason for cheer. The slight correction that took place not too long ago, we seem to be out of it, and now the market seem to be on a new bullish trend. Is that how you're looking at it?
No, so the positive momentum in the market continues, and what has come out late evening yesterday with the IIP numbers better than a lot of analyst expectations, along with CPI inflation actually coming down. I think this gives a lot of scope in terms of improvement on the manufacturing side, though I think the next month's data points will be equally important. And my own sense is that it would taper around a little bit, but still remain very, very robust. Again, on the inflationary front, you're probably looking at the figure of around 4.2, which is a very comfortable level that the RBI is looking at. It also opens up an argument for a 25 bips rate cut by the RBI over the next few months. So I think earnings recovery, along with some stability on the macro numbers, along with global stability, I think that is what is giving impetus to the markets.
All right, Mayuresh, this is Fatima. Thanks for having joined us. Just wanted to ask you the resounding question I keep hearing when I speak to people about what's happening in the markets is, when is it a good time to get out? Because they're just sort of a little nervous going forward, because overall there seems to, of course, be that the difference between how the economy has fared and also the euphoria and liquidity we're witnessing in the markets. So what is safe advice when it comes to taking money off the table? Are you recommending perhaps moving away from certain sectors and putting more, taking larger positions in others? How are you sort of thinking about this whole thing about, reassessing a portfolio?
No, so Fatima, from a valuation perspective, obviously we're fairly valued, because the expectation is that second half will give a large earnings recovery, and that should provide some amount of re-rating to the markets. Having said that, a few of the large stocks which have done well, a few of the mid and the small cap universe which has actually performed even better than the large cap universe, and valuations are seemingly looking very, very stretched. I think these are some of the stocks on a historical comparison basis and on a thematic basis as well, looking at the sector averages. One should really look at these stocks and probably take some money off the table. And there does exist value in one section of the market, but earnings are still depressed. So PSU banks, you've probably got a few of the cyclical names as well, a few of the cement stocks as well. I think, and then pharma as well. So I think these are the stocks or sectors where value probably exists, but earnings probably are not expected to come through. And the market is still trying to fathom the fact that they're still going out with stocks and sectors where the earnings growth seems very, very strong. So I think a mix of these sectors, after exiting from a few of the small and mid caps where valuations have become stretched, I think this is the way I would play the markets over the next one.
You know, the last time that we saw these levels, Mayuresh, was not too long ago. Like I started out by saying, this was around September the 19th. What has fundamentally changed since then as far as market direction is concerned? What are the factors that we can ascribe to the kind of run-up that we are seeing right now, the fresh high of 10,170 that we're talking about over here? And since you're talking about Q2 numbers as well, it's not expected to do remarkably well, but certainly the euphoria seems to be building up, even as we wait for Reliance numbers, stock that I'm sure you're watching out for too.
Absolutely, and the underpinning that the market is probably going with is a strong recovery, as I mentioned earlier, in the second half numbers. So I think Q3, Q4 is where a strong earnings momentum should start kicking in, giving an overall base for the market's valuations to probably sustain at the current level. Having said that, yes, I think nothing's changed fundamentally over the last 3 months, 6 months. I think, as I said earlier, even during the fall, that a lot of the factors during the fall is something that the markets are aware of. There's nothing out of the blue that has come out for the markets in terms of either fiscal spending that the government is doing, in terms of the impediments that the economy faces as we transit in the GST phase. Yes, demonetization obviously has some ripple effects as well, which can be seen in the rural economy even now. But largely, again, I think the call is that for an economy like India, I think the growth aspect and the value aspect obviously remains over a longer period of time. Because as people start moving up the value chain, as more and more disposable income starts happening at the rural and semi-rural areas, I think the consumption theme for India will continue, and that will reflect into the larger corporate earnings, along with the unorganized sector pie coming to the organized pie over the next few years as well. So it's going to be an earnings recovery, and it's going to be a value story over the next 3 to 4 years. And there is no other asset class at this point of time which probably is competing with equities, and liquidity remains strong. So I think all these factors probably combining together to probably fuel the kind of rally that we've seen.
Mayuresh, you've put it really well in terms of what we're going to be looking at when it comes to the next following few quarters. But I just want to ask you, how are you looking at the rupee at this stage? What is it that you're actually really watching out for, if you have been?
No, so again, Fatima, I think rupee probably is expected to stay in a range. Again, the kind of reforms that one expects on the corporate tax side that Mr. Trump may or may not announce, I think that might have some amount of effect in terms of the dollar outflows. And to that bit, I think you might just see that rupee moving around a very constrained kind of range. But in my own opinion, I think at least over the next 3 months, I'm not seeing the rupee either depreciate very sharply or appreciate very sharply. I think it's a very tight range that the rupee will trade against the dollar.
The rupee, of course, that story is going to play out against exporters. But I specifically was asking about Reliance as well. Mayuresh, if it does touch $13 a barrel, do you think further upsides to the stock? And would you even recommend a buy at this stage at the 880 rupee levels?
So again, Vikram, I think the kind of outperformance that Reliance has given after years of underperformance last year has been significant. Now, whether they'll be able to report and repeat the kind of outperformance in terms of a stock price movement, I think it seems difficult. But again, I think the key factors that are working in favor of Reliance, yes, the GRM is expected to be around $12.7, $12.8 a barrel, and that's significantly higher, even a quarter back or a year back on a comparison basis. But the petchem segment is doing well as well. The petchem volume is expected to remain on the higher side. So the two core segments for Reliance will fire on all cylinders. You're probably going to see the telecom piece and the costs that are going to get apportioned onto the balance sheet, probably taking a sheen away in terms of the overall reported numbers. But even in terms of the subscriber base that Jio has built, the new feature phone that it is launching for a large base, and the ARPU is expected to get generated out of, and the stability in terms of revenue reporting, I think the break-even in terms of telecom operations, if the management is able to give clarity that it can happen over the next few quarters, the kind of capex that they've done for the core as well as the telecom business, a lot of those cash flows will start coming onto their balance sheet, which will then start reflecting positively on their ROEs. So yes, I think I remain positive on the stock, and a clear disclaimer, we do own that enough.
All right, Mayuresh, thank you very much for having been accessible at this time. We've, of course, gotten a conversation with you as we see just literally how high the Nifty's gone, hitting that record high. That does bring us to a close of this edition of Lunch Money. And what a great note to end things on this Friday afternoon edition of Lunch Money. It does seem like Diwali has come early on the large street, and we're looking at the banking pack really contributing 1.5 percentage points to the kind of up moves that we've seen in these markets, Fatima. We continue to track these markets and, of course, get you the very latest in corporate news. That's all happening here on BTVi. Do keep it with us for the moment.